What's up? What's up, Varun? Good afternoon, Nick. Hey, Pam. Hey, Sharir. What's up, Eddie? Eddie Vic. To the moon. What's going on, Elliot, Ben, Rex, Mike, Josh, Min? Good afternoon, TJ, Tate, Michael W, Lenkov in the house. What's up, Chris? Trial member, welcome. Alright, I guess let's hop in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I got out of Roku, I got out of Lucid, I got into very small Apple, and I got back into pretty small Amazon. So that's where we're at. 15 longs, 0 shorts. What a day. Today was crazy. Really, the beginning of the day was crazy. The beginning of the day today was totally nuts. You almost can't even see it when you look at the SPYs. You got to look at how the Qs were trading versus the IWM. And you got to look at how the Qs were trading versus like the QQQE, the equal weighted ETF, to really tell the story from today. I think if it wasn't for this surprise rebalance, today would have been actually like a really boring day. We got a lot of stuff coming up in the back half of the week this week. On Wednesday, we've got on Wednesday we have CPI, and then Thursday, Friday is really when earnings season starts. Really, you know, the earnings season always kind of starts with a whimper. You get a few companies, a few banks that begin to report, and then it really picks up like the week after next, I think, is when things get really big. But at the end of this week, I think Thursday, we've got Delta. Friday morning, I think we have JP Morgan, 2 of the other banks, JP Morgan, I think Citi and Wells Fargo, but definitely fact check me on that. It might be Bank of America, I'm not sure. But yeah, I think it seems like today would have been a fairly boring day overall, especially if you just look at the SPYs. But this morning just felt nuts. Some stocks were having some big moves to the upside and the downside. There was some really interesting relative strength and relative weakness. And we were able to figure out, for me, unfortunately, after the fact, I hope some of you guys were able to take advantage of it earlier. I know Brant, who had to leave for the day, he was all over it very early, this rebalance stuff. And I was just... whatever, no excuses. Is just trying to keep up with information with Pat not being here. It adds a lot of extra work and effort on my side from a time perspective, and I didn't actually read into it. I probably also didn't read into it because I don't really trade like quarterly rebalances and end of the month rebalance. Like, I pay attention to it. I mean, just at the end of last month, we were supposed to have these massive rebalances between bonds and equities that were supposed to lead to massive equity selling, and it didn't manifest itself. And usually, from my experience, that stuff is known so far ahead of time that it just gets front run into nothing. So, when I heard like there's the rebalance information came out today, I didn't jump in to do a ton of extra research on it because, again, that word doesn't really trigger anything for me that gets me excited. But this was different. This rebalance information was different. I think it had a major effect on how the market moved today. And Brant was looking into the specifics of the rules for us, and I caught part of it. But basically, it's like if a group of stocks, and I'm still a little uncertain on how they say what a specific group of stocks actually is. But if a group of stocks gets to be over 40% of the weight of the NASDAQ, they rebalance it so that it becomes 38%, I think. So we must be at that point. So they need to rebalance the NASDAQ and basically create, to some degree, forced selling in the biggest market cap stocks to rebalance the NASDAQ, while at the same time probably creating a small buy impulse on every single stock that's not a mega cap stock. So that actually helps overall breadth which has been a big problem for this market, though probably less so recently. There's been some catch-up in breadth with the IWM improving and RSP improving, but it actually supports breadth in the market. So what we saw off the open, and even pre-market to some degree, was big weakness in mega cap tech stocks. And I remember even like scrolling through, and I just didn't put it together when preparing for the morning meeting. Like, wow, you know, the Qs are not down very much, but Microsoft is super relatively weak. Apple, you know, a lot of these stocks are set to go below Thursday's low, which we said in the morning meeting was kind of a key spot for bears. Yet the NASDAQ itself isn't down very much. I think at one point, Rock on our team here after the market opened was like, how are the Qs not lower with, you know, list your magnificent 7 stocks of huge market cap all being down really big. Usually what we see is if those stocks are down or up really big, that the Qs are down or up really big. I mean, they've become such a large weighting of the Qs that they trade together. Like, you know, wherever generally all of Apple, Microsoft, Meta, Nvidia, Tesla, etc., where they're trading as like a group, if you scroll through them and just try to eyeball the average of how much that group is up or down, and then you type up the Qs, it's pretty much that number, right? So it was a little bit strange this morning, pre-market and after the open, that it seemed like a lot of these really big cap tech stocks that are so heavily weighted the NASDAQ were so weak that the Qs themselves weren't down as much as I would almost expect on a percentage basis. But this all had to do with this rebalance, and that probably could have led to some good opportunity to take advantage of that. The first thing that Brant said to me before the market opened today was we should be short the Qs and long QQQE as a pairs trade off the rebalance. And I was like, okay, like that sounds interesting, you know, like interesting theoretical trade, but I'm busy trying to manage my Rivian short, so whatever, thanks for the information. And by the way, I'm always very appreciative to any person on the team that provides any information that only helps us. And if anything, he handed me an absolute layup, and I just I didn't take advantage of it. I was like, I got my game plan at this point. I know what I want to focus on, which is fine. I actually had a great day today. I had fantastic P&L. I made money in pretty much everything that I day traded. Some of the things I day traded really well and made pretty good money in. But at the same time, I can't help but look at the market today and and think I could have done a better job with my research and actually made significantly more, because if that QQQE versus QQQ trade, and I've never really seen this happen, by the way, over the course of my entire career trading. I've never seen a set of stocks in the NASDAQ or anything else become so big as a market cap weighted thing that they need to rebalance like that. So this is a learning experience for me too, and I'll remember it for next time if there ever is a next time. But this really, in a lot of ways, was just a massive layup of a trade. I mean, look at this QQQE move today versus the actual Qs. Look at this Q weakness between 9:40 and 10 a.m. Look at what the QQQE was continuing to do between 9:40 and 10 a.m. And the regular Qs, this is probably going to be what most of the big cap tech stocks look like if you kind of scroll through them, only weaker, with a big gap down, right? Apple, big gap down, and then by that 9:40 to 10 a.m. move just got completely smoked. And I remember we calling out this hammer here for some of these big tech stocks and for the Qs themselves. I said you could be long the Qs versus this low. I said you could be long the SPYs versus this low. That worked pretty okay until that low eventually broke around the middle of the day. But Apple, big selling here between 9:40 and 10 o'clock. Amazon, which was really relatively strong, and I actually had this on my long list for today because I'm like, oh wow, Amazon's relatively strong compared to the Qs. It's got several sets of news. It has a new outperform initiation. None of that mattered, right? And this just goes to show, by the way, the importance of market dynamics, which is something that we in the virtual trading floor here spend a lot of time talking about. And Pat is great for that. And unfortunately, maybe if Pat was here, I would have been able to do a better job reading information that he provided to be able to take advantage of this rebalance. So it just again goes to show the importance of Pat being on our team with the morning note, because that morning note spends a lot of time talking about market dynamics, and market dynamics as an important piece of information in the trading puzzle is something that I spent pretty much my entire career for the most part overlooking. It wasn't really until like 2019 that I started really paying attention to, things like option flow and how that affects the market, these gamma squeezes when they can come in and how that affects the market, how broad positioning really can affect the market. And now it's become a huge part of my game over the course of the last 4 years as I've learned so much more about it. And this is just a perfect example. These stocks today, whether you're talking about big tech selling down or a lot of the other tech stocks that were really strong and were actually beneficiaries of it, those names did not move on fundamentals or technicals today. I mean, obviously, to some degree, there's still technical trades, and you can still implement technical analysis. Again, you have the hammer candle at lows for the Qs, for Amazon, for Apple. That's a technical trade setup that you could take advantage of when you get extension like that with that tail coming in. Ideally, you have increasing volume, which you didn't have. But these things didn't move off the open based off of daily chart technicals. They didn't move off the open because the fundamentals were massively changed from Friday to today, where big cap tech all of a sudden were much worse stocks, and some of these growth tech stocks or other NASDAQ names that are not as big of market caps, had something great happen to them fundamentally that drove the price up. They moved entirely off of market dynamics, and it just happened to be a newer market dynamic concept that I've never heard of before, which is the fact that a rebalance, I guess, can come into the indices based off of rules, off of weighting, which is exactly what happened that created it. So just really interesting, and even as I didn't fully understand it, I remember trading the first half hour, and I'm doing my best here. I have some but not all of Pat's resources that he uses for news and option flow and things like that he's kind of set me up with for when he's not here. So I'm doing my best to try to implement that information into the VTF, or at least verbalize it if I'm unable to type it in while managing my swing positions, while initiating my new trades. And it hit a point where I was so busy actively trading because I had some things, like some of these big tech stocks, moving against me. I had other things that are moving really heavily in my favor. Got a couple other day trades on that were kind of hectic. That Rivian I traded, I traded a lot of that Rivian today at a certain point, and was varying degrees of aggressive, but traded it for the most part the entire day. I had a point where I couldn't even look at that other stuff. I couldn't look at anything except for my execution, my level 2, and my chart, and I was trying to, as quickly as I could, just keep up with the flow of executions that were coming in. I wish I had in that top bar of my light speed, for people that are on light speed, there's a little thing there that tells you how many open orders you have. So I look at that, and very regularly I'll usually have 200 or so open limit orders out in the market at any given point in time during the trading session. I wish there was a thing there that could tell me like how many actual executed orders I've had throughout the day. Maybe there is. That would honestly be a Pat question. But it just seemed like my orders were getting executed just so insanely rapidly at a certain point that I was just struggling to keep up with it. So this morning was totally hectic with how some of these stocks were moving. You can add it on account summary, or I'll have to try to check that out after the meeting and see how that works out. See you, Billy. Account summary at executions. Or I'll take a look at it later. But I just the executions were coming in just extremely rapidly. Hold on, let me just see if I can see that real quick. Account summary. I should have that on here somewhere. I have account summary. I don't think it's got executions in it. I probably would have to add it in. Added liquidity, shares traded. I want to see actual executions. It's probably a setting that I can add into it. Account summary at executions. Whatever. I'm not going to bore you guys and play with it now. I'll do it later. But yeah, so I mean, that was the kind of insane price action off the open, and you can really see it if you look at like the Qs and how they traded in the beginning of the day versus the IWM, which was just an insane mover on the upside in the beginning of the day, and is much more representative of probably your average stock that's out there. Or if you look at QQQE versus QQQ, and then it created a really interesting dynamic on the daily chart for a minute. We discussed in the morning meeting today the importance of Thursday's low and Friday's high, right? So just a quick recap on this market. Back in May, we had a breakout of a 2-month range. I just got the SPYs up right now, but Qs would be a similar story except for more strong. We had a breakout here of basically a 2-month range. Led to a fantastic move. We were all over that. We caught it. It got too extended. We shorted. We looked for the bigger pullback into 430-ish. We caught it. We looked for the bounce. The bounce actually exceeded my expectations. I thought that we would build out more of a wedge here and spend more time correcting. The bounce exceeded my expectations to basically make equal highs. Some people have been calling for this to be a double top. I don't agree with that, at least not yet. This only is a confirmed double top if this low breaks and we start losing 431. So that makes that a really big line in the sand. And if anything, I was impressed by the equal highs because I expected a lower high to lead to a wedge build out. But we exceeded my expectations to the upside. SPYs and Qs basically got back to these highs. Then we pulled back. Into that pullback on Thursday, we discussed, well, look, this was a pretty big pullback of a big move, so getting back to highs in 5 days straight is also a really big move. It doesn't need to be a new high if we have a quick pullback that creates a lower high that then actually makes your new high come in. So everything was working out pretty textbook, pretty picture perfect. The big pullback, the really big 5-day bounce, okay, equal highs, maybe not the end of the world. Let's see if we can get a higher low leading to a higher high. And then on Friday, we had this failure, right? That failure to go after those new highs. We had this upside tail. So what you're left with, and this is really the beginnings of kind of a micro wedge here on the daily chart, is a pivot low from Thursday followed by a pivot high from Friday. Tails on each side. You know, roughly, what do tails mean? These are pivots or potential pivots. This is a spot where buyers took control from sellers. Fine, makes sense, especially within the confines of an uptrend. But Friday at highs was a spot where sellers took control from buyers. And that shouldn't really happen if you're just going to get your straight trend continuation. So all of a sudden it makes this low and this high extremely important. If Thursday's low breaks, then you know the buyers failed to create a higher low. They failed to come back in at those new prices and create that continuation. If we lose Thursday's low on a closing basis, which is where buyers have attempted to come in to make that higher low, this will make this market go from very bullish to more neutral. I don't want to say fully neutral. I probably would say fully neutral if we lost the 431 pivot that we created a few weeks ago. So I would say like, but no longer fully bullish either. We'd be like neutral bullish if that makes any sense. If we go back to like the bullish bearish neutral game that I love to play on big picture for technical charts, just to give us a very general understanding of, hey, should we be looking long? Should we be looking short? Or is it a two-way market where we can be trading long and short? If I can look at the big picture of the S&P and say, hey, this is bullish, and I look at the Qs and I say, hey, this is bullish, I look at the IWM and I say, hey, this is bullish, would you rather be long or short? Everything else held equal, you'd rather be long. We sometimes can make exceptions to that when we have large extension to the upside. So I'm like, okay, this is a warning signal on Friday here. We're still bullish, still better off being long than short. But if we start really, having the upside tail from Friday where sellers came in unexpectedly lead to a break and a close below Thursday's low, that is a little bit of the beginning of a warning sign where we start to move away from that bullish characteristic a little bit more towards neutral, which begins to make the market a little bit more of a two-way market. And then I would argue if we get below 431, then we're going from, we're going to like full out neutral at this point. And then to get to full out bearishness, the bears have a lot more work to do. They need to reverse an uptrend, and that's not something that just happens in a trading session. So Thursday's low, Friday's high, both very important. Qs gave us a very similar picture. The silver lining I mentioned in the morning meeting was the IWM relative strength on Friday. Yeah, you have a little bit of an upside tail from Friday's daily candle in the IWM, but it's nothing like the bigger doji that we have in the SPYs and the Qs. And the IWM was able to recapture 184, which is a very important level that I was disappointed when the Russell lost 184 off that relative weakness on Thursday. So we need to recognize that even though Friday was a little bit of a warning signal in the SPYs and Qs for bulls, one, overall, we are still in an uptrend, and two, the IWM is showing relative strength, and the Russell tends to be a leader. So you're still going to be better off being long than short on the entirety of this market. And then the beginning of the day, today, now we have this full understanding, big picture, that kind of helps develop our big picture game plan coming into today's trading session. Pretty quickly off the open, I'm looking at this market and I'm like, wait a minute. So I just told everybody that if Friday's high breaks, we look very bullish. If Thursday's low breaks, we look a lot more bearish. What the heck does it mean if I've got the IWM breaking highs from Friday as the Qs are breaking lows from Thursday? It's like a total mind, I don't have a good synonym that's not a curse word, but you guys know, a total mind-blowing thing. Like how do I rectify that? And eventually what I realized when I finally was able to slow down a little bit on my kind of hectic trading the first half hour was I saw what the QQQE was doing. And I was like, wait a second. The fact that Qs here are below Thursday's low actually doesn't really matter that much, even though you don't want the market losing that tail. But when you look at it within the confines of what the IWM is doing or what the QQQE was doing, which wasn't even close to that Thursday low, and then you look at like, okay, this is just a select few issuances that are almost manipulating this entire index to be able to break that low, and this is entirely caused by a market structure, market dynamic rebalance that's actually coming in on the market. And then all of a sudden it's like, okay, this market is bullish. I probably just need to be very careful with my trading in Amazon, Microsoft, Meta, Tesla, Nvidia, Google for today's trading session. And at that point, I already had a little bit of Apple on my books, already had a little Amazon on my books. I kind of bought a little bit of Apple, Amazon, Google when those hammer lows came in. They were all very small. Well, this is really not where I want to be focusing my energy today, because I still don't know. Like, obviously markets are very efficient, so they're going to try to price in that rebalance really quickly. But I don't know if that's even fully brought into the market even at this point. So it certainly created a really interesting morning, and that was on the weak side. Then we had some stocks that were just explosive today. Like this Roku I'm in. There was no catalyst for this Roku to wake up the way that it woke up today. Sure, there's a little bit of a level at like $66 if it could get above it, which it eventually did. But there were a whole ton of stocks that you could look at. And I don't, it's funny, I don't have what 500 companies that are in the S&P like all memorized, that every single one of them is in the S&P. I don't have every company that's in the NASDAQ memorized on what's in the NASDAQ. But I got a feeling that if you look at, and I remember us talking about selective growth strength this morning, that some of these growth stocks were really outperforming very early and others weren't. I would bet you that, like, Roku, as an example, is in the NASDAQ. And some of those other growth stocks that we saw that weren't really performing in the beginning of the day are actually not NASDAQ listed. And this was all still part of the rebalance trade, which as a technical trader, you're still able to take advantage of. If you're a momentum trader and you're trying to figure out where the relative strength is, right, which is what we always talk about, and it's what we still said in this morning's morning meeting. We're like, well, let's focus on relative strength and relative weakness. Let's see what can get above Friday's high or to be long. Let's see what we can get, what gets below Thursday's low to be short. So if you just didn't know anything about any of this rebalance stuff, which again, I blame myself for not knowing enough about it, not doing enough research. If you didn't know any of this rebalance stuff, but you went in with the game plan that we discussed, which is Things above Friday's high that are relatively strong, you can and want to be long. Things below Thursday's low that are relatively weak, you can and want to be short. You could have caught, I don't know, obviously would have to go in and look at them stock by stock to see the appropriate entry execution. But all of a sudden it makes being involved in this Roku to the long side very possible, even if you didn't know anything about the rebalance and that Roku might be a beneficiary of it. Or it makes, even though they were probably harder trades, like shorting an Amazon this morning, much easier. Even if you didn't know anything about the rebalance, you know relative weakness, and you know if this thing's getting below Thursday's low, and that's a potential short setup that comes in for you as well. So again, pretty interesting day from a day trading perspective. Some good ones in there also. I had a couple pretty good trades in this Unity. First off of this extension low for this pop to the ADMA, then off this extension low for this pop to the ADMA. Both of those worked out really well. I did a good job with Rivian to the short side personally. I started shorting it pre-market, which I announced into the VTF. I think this was very difficult to execute if you weren't in it pre-market though, because they opened it. They did not give the opening RDR, right? Friday's high was 63 cents. So ideally you wanted this to be above Friday's high, trade back below through it, and then short versus that high. It didn't give you that opportunity. They just sold this thing hard and heavy off the open. I liquidated that position into 24. I started rebuying real small on the way up. I got heavier here at highs and caught this kind of break lower. So Rivian was a really good one for me as well. Unity was really good. And STG, even though I only got a partial fill on it this morning, I think I was able to buy like a third of what I wanted. I had a bid. I put in a bid pre-market at $4.10, and it got partial pre-market, got partial a little further when the market opened, and I think we discovered that it had an 18% short float. It restated guidance. There was a break of this $4 level here that we were looking at. Is it a false print? Oh wow, this thing really traded all the way back down to 437 today. It's an interesting upside tail. I got all out into $5, and I never looked at it for the rest of the day. But yeah, this was a really good one off the open. If you could get stock, it traded with really good volume today, but the spread at the beginning of the day, when this thing first opened, it's a $4 stock. When this thing first opened, it had like a 12-cent spread, so it's a little bit tricky to get stock on that one. My worst trade on the day, even though I actually ended up positive in it by a small amount, was Zion Q. Yeah, $14 was a really big level. Really big level on this bull flag. ADMA caught up. I love when they give this shakeout a couple days before the ADMA catches up to lead towards the break. $14 is resistance. I saw that it was getting a bunch of option flow, bullish option flow. So to me, that's just a lot of layers of probability. I was nervous about buying with the $14 breakout because of how big the move was. I'm like, man, if I buy, and this is what I say all the time, oh man, if I buy this $14 breakout, I got to give it all the way down to lows. Do I really want to take 55 cents risk in a $14 stock? The answer to that is pretty much always no. But I decided, you know what, I'm going to take a little bit up here at 14 to get some stock, even though it's 45 cents risk. This is a great looking pattern. I think I was asking you guys the short float information on this one in real time also, which I don't remember what it was. So I did start some at 14 despite the extension. I figured that I'd be able to get a pivot somewhere here with the ADMA catch up to be able to add, and it never really happened. This thing just died. Huge move up on volume. A lot of these names are trading strong. I felt like I had every layer of probability on my side on this trade, and the only thing I felt was against me was the risk reward, right? So it's like, all right, let me start with just a feeler so I can look for a signal to be able to get heavier where I actually have better risk reward to go with the probability of success. And then this thing just absolutely died. And the way that I traded it at that time, kind of based on my size, was I didn't use a stop loss at lows. So I held some stock that I bought at 14 actually all the way down to this low, looking for a pivot to be able to come in. I did add size off that pivot and was able to kind of work the trade where, this is not really what you want, but it was just kind of based off the game plan that I had and how the trade worked out. I was able to work the trade where by the time I got to backed up to 1340 something, I was break even in it, which isn't wonderful. And then it never broke lows. It created a higher low here and eventually really wound up where I was able to liquidate into the close and be profitable in it. But it's not what I was looking for from this trade at all. So to give myself a pat on the back, I managed this trade incredibly well to be able to make money on it, even if it's a smaller amount of money, given that I actually started buying at $14 as kind of a first buy on this thing. But that one definitely did not work out and was very difficult. But everything else I was involved in worked really, really well. And I hope you guys were able to catch some of that stuff also. So that's pretty much all I have for today's afternoon meeting. I'm happy to answer any questions anybody has. So first thing, I'm seeing Elliot right before the meeting started. Question for today's afternoon meeting: trade review and thoughts on DraftKings. Sure, DraftKings was a monster today. It's another one that I would bet is in the NASDAQ, though I don't actually know that. Monster breakout through this like $26.75 to $27 area. Phenomenal follow through on a day two. And the day one wasn't so big that you would feel uncomfortable about buying the day two, because there's not really that much extension because of where it's coming from, despite that being a day one on Friday. Let me read what else you have to say about it. I got in the trade at 950 off the pivot. Love it. Given the relative strength and the technical signal, I sold some on the way up and was able to buy back and sell that piece once throughout the trade. I sold on the 1030 candle and bought them back on the 80 MA on the 5. I sold at the 1030 candle, nice, and bought it back on the 80 MA on the 5, nice, nice. I sold a third of the position at the close, and I'm holding a third for a swing. Awesome. Where do you think? Question number one: where do you think a plausible target might be? This thing's trading at highs, not all-time highs, of course, from the old bubble. But you don't really have much resistance in this, especially with how this thing traded on the way down here. When this thing was breaking support at like $45, remember this? It didn't even attempt to find support until 27.50 and create a pivot. That sell-off at the end of 2021 into 2022 in these growth tech stocks was something for the textbooks, honestly. You know, people try to point to the bear market, not to get off topic, in 2022 as being like a mild bear market on a percentage basis compared to other bear markets in history. I think we just went down like 24% or 26% or something like that in the S&P. Statistically, the bear market that we are coming out of was small in S&P duration, small in S&P percentage pullback, basically being like 24 or 26% relative to history of other bear markets, but also long. I don't remember exactly what all the statistics are there, but it's long. It was longer than the average bear market, meaning we were stuck down in that area ranging for a really long time before we finally, moved back up 20%, where people began to call that the end of the bear market that we were in. So people like to, in hindsight, the history books might say that this bear market in 2022 was a very mild bear market from the percentage that we pulled back, but they're missing they're missing the big picture, because it's once again disguised by market cap weight, right, of those big tech stocks. Because I think if you looked at, like, I don't remember what the statistics are, but in the IWM, it's something like, I don't remember, it's not exactly correct, but it's something like 75% of IWM stocks were down over 70% at their bottom. Like that, when you look at that type of statistic, instead of just the fact that we went down 26%, then you say to yourself, wow, were we in a bear market or were we in a depression? Maybe it was 50% of IWM stocks were down more than 75%. I think that's a little bit closer to what it actually was. But that's an insane number and an insane drawdown. So anyway, I'm just looking at to answer your question, I'm looking at this DraftKings historically to try to find some levels for you, and there aren't any. It's a little bit of a level at 34. Could be a target. There's big resistance at 40. Those are the only real levels I'm seeing if you're looking for technical targets. So what I would do here is I would almost treat this as if it was in space. I would treat this as if it was almost at all-time highs, even though it's obviously not. There are some resistance levels in the back, if you go back far enough. But I would just basically be looking to trail. You know, if you want to have some real targets in your brain of 34 or 40 bucks, go for it. I love it. But otherwise, you know, those targets are so far away that your swing position should be something that you're probably thinking about trailing on the daily chart as you're able to get continuation. And your second question on DKNG, what interval of space would you buy back and sell stock? I was thinking around 40 to 50 cents. Part of the answer to that question depends on how much stock you had initially and what you can afford to do. My ideal answer to you is 25 cents. 40 to 50 cents could be fine also. All right? I really think it depends more on your risk tolerance personally and the amount of shares that you kind of have there. Thank you for the question, Elliot. Scrolling through here. MSTR. Yeah, I don't like to trade MSTR because of its... Well, it's Microsoft. I don't like to trade MSTR because of the wide spreads on an expensive stock. If you're going to trade one of these Bitcoin type of names, I prefer Mara or Riot personally. But yeah, I mean, Bitcoin having to move here a bit, and then all of these names, along with a lot of the other growthy type stocks, they were just very strong, giving some pretty incredible trend continuation kind of across the board in them. I don't have a position in any of them. This MSTR probably is the one that had the best technical setup for continuation today compared to Mara and Riot. Varun, what is it? Come on, Varun. How many years have you been at T3? Good till cancel orders do not work on your system. I always encourage questions, but I've been here for a very, very long time to not know the answer to that one. Yeah, ENPH, that was another one today. What did First Solar do? Not that much. From Mike Reed. And Mike, I thought you were going to ask me the question that you emailed me because I didn't respond to you in the email. And I didn't respond to the email because you said if I didn't respond in the email, you would bring it up in the afternoon meeting. I didn't see your email till today. You had NEO $10 was discussed in the morning meeting. I don't remember whose idea it was. This thing was tricky off the open, and then it just exploded through that $10. You took NEO at $9.50 versus the low of the day. That's a really tough trade in my opinion. I actually don't like it, but we can get to that in a second. You're able to get your 1-to-1. I thought the 950-ish, sorry, the 1050-ish area, assuming you mean price, not time, might be tough, and I took off 75%. I left the rest as a runner per my game plan. When taking breakouts like this one, do you have any rules for taking off a certain amount at the breakout level? I know the level can be subjective. So first, I just want to start to tell you why I don't like your entry. You got a good looking little wedge here on the 5-minute, and you kind of buy, but the level is really $10, and it's a sloppy level, which means that I really want volume confirmation, and I want the level to be kind of confirming itself by trading through the level on volume, which does happen. So if you told me you bought this through 10, I would really like that. If you told me you bought this through like 10.06 off this high, or through Friday's high at 10.09 with the volume coming in and it's starting to really confirm the break higher, I would really like all that. What I see here, you buying at 9.50, is you buying a stock that's out of play, not trading on volume, not showing any relative strength, not even trading like a lot of the growth stocks that were really strong, and not even above the level yet. I think that this trade here is a cheat on the breakout, which can be fine. I'll cheat on levels sometimes, where I'll get in it, before the level actually breaks. But when I do that, I'm doing it, or I want to do it, because I feel like the breakout is already very high probability because of the other layers of probability, the relative strength and the volume, and you don't have the relative strength of the volume. So I don't. Just to give you some feedback, I don't love the initial trade. I don't love the initial trade entry and execution of it. I am very happy for you that it worked out and that you were able to make money. I don't really have a rule for, when you get to another level, and I'll just assume that 1050 is a level on the daily chart, and that's what you saw there, and it was extended into it. I don't really have a rule for what percentage I take off. It's usually already built into the game plan that I created before I entered the trade, where I'm saying, all right, I'm giving myself a 1050 target, and I am going to liquidate this percentage of my position at the target, or I'm going to get all out into this target, or whatever it is. I want that built in before I even kind of get into the trade, and that's going to be based off of how much I like the trade, how much I like the daily chart. Is this something I could see myself swinging or not? 75% feels like a high percentage to me. For me, I would probably, again, it really depends on how I set up my game plan. What percentage of, after my risk is covered, what percentage am I planning on trailing? What percentage am I planning on covering, like, incrementally for cash flow, like we've discussed? What percentage am I planning on covering at targets, right? Those are 3 questions that you can ask yourself. For me, I probably, even if I had a target of 1050 on the daily chart, would not be selling anything more than at most 25% of what I have left after the one-to-one kick. If that makes sense. Seems aggressive, 75%. So I hope that helps, Mike. From Eddie Vick, what do you guys think of Starbucks price action today? Wow. Starbucks in the NASDAQ? NASDAQ listed. Starbucks has been very out of play. It started trading well when the old CEO came back for a period of time, and now it's been kind of really out of play for a while. $100 is a little bit of an inflection point, but this daily chart's not giving me anything to work with. Super strong today. And even though you don't think of Starbucks as a tech stock, I wouldn't be surprised if you can do a little research and see it's in the NASDAQ. Would there be follow-through on it this week? I don't know. I don't want to make that bet on such a sloppy-looking daily chart. I got whipsawed when I delta hedged last Friday at 96.30. Now I went straight back up to the Monday level. Overhedged it. Now I'm on the short side. It feels like a... Yeah, Eddie, I got a feeling here that you were a victim of this rebalance with the Starbucks that no one expected. So I would look into that. And the chart's sloppy. So if it was really just a rebalance effect and you're dealing with a sloppy daily chart, I would probably stick with your position. Maybe try to work out towards more of your initial game plan if you don't want to be net short. But I wouldn't overread today's price action in Starbucks. From Cameron, can you talk about when you would trade against your original thesis? For example, my plan was to trade a breakout in Meta, so I got long Meta at 940. Okay. Meta was like the strongest one out there. The daily chart looks beautiful. You could have tried this thing, I think I said it in the morning meeting, above Friday's high, which is 296.20. So it breaks that really early, really strong, and then just the weakness in these names for the rotation, I think, got to this. You're looking for the daily breakout. However, I saw the tape flip as sellers were slamming bids, and other big cap tech names were getting sold as well. I stopped out and flipped to take advantage of other traders who got stuck trying to get long this breakout. It ended up being a nice trade, but I'm not sure how to think about these scenarios from a game planning perspective going forward. Sure, so price action trumps thesis. The price action is always going to be more important than any thesis you have. I like the idea of having a fundamental thesis for a stock. I do. It gives me more conviction when the technicals confirm it. If the technicals are not confirming it, I may have no trade. If the technicals are telling me that this thing looks terrible and is going to go down, even if my thought process is bullish, you're better off being short than long generally. For me, for the way that I trade, for the way that I trade, I'm not mentally flexible enough to do it with consistency. So if I have a bullish thesis on something and the technicals don't confirm it, I'm much more likely to just not be involved at all than to try to be on the other side of the trade. My trader Felipe, who unfortunately hasn't been able to spend as much time in the VTF the last probably year now as we would like, phenomenal trader. My friend Felipe has always been kind of the master at that, where hey, the technicals are no good here. I'm short the position, and I don't care what your thesis is or what my thesis is. And he's been phenomenal at that. So you're better off trading in the direction of the technicals. Know your own personality, at least to some degree, with that. Some of the stuff you're saying in here, I'd be very cautious on. The tape reading stuff that you're saying on concerns me a little bit. I'd be curious to know where your kind of tape reading skills come from. That's not meant to be an insult. It's just that I am a very good tape reader. I'm just going to go ahead and say that. And the tape is just not very important anymore. So I don't think that traders should be making decisions most of the time. I guess I do it every once in a while. I'm extremely confident in my tape skills, and that's why I'm confident enough to say this. I really don't think that traders, especially traders on our team here, unless you have been trading for over 10 years, should be making trades that are tape based. We don't teach that stuff anymore, and we don't teach that stuff anymore for a reason, because it's just not generally going to be leading to consistent profitability. It sounds like you were combining what you're seeing in the tape with some other stuff. Fine. I also have never been a fan of trading failed breakouts. I just think it's too complicated. The breakout's a really simple trade, and from a failed move comes a fast move. And we see it happen all the time, where you get a failed breakout that leads to a fast move to the downside. I just think that there's a lot of other times where a failed breakout isn't a failed breakout, it just needed more time, or was too extended on that small time frame and then goes, or a failed breakout just then leads to chop. You see that a lot also. So I have felt that trying to short the failed breakout trade, even though it works once in a while and you get that failed move to the downside that's really big, I think you're just kind of overly complicating your trading. I'm a big believer in keep it simple, stupid, KISS as an acronym. Where I don't love it. I mean, this thing was extended up here. It was super relatively strong. It breaks that opening low. This tail low here, as the ADMA is catching up, could have easily been it. Creates a pivot there. If the market's strong, which it kind of was, and especially if there was no rebalance, this thing easily could have snapped back to almost 297, created a higher low, and then was breaking highs by 10.15, 10.20, and now here you are. You had a thesis to the long side. The stock is relatively strong. You decided to flip short, and you're losing money on both sides. So I don't love it. To give you my honest feedback, I would really rather just kind of keep it more simple than that. And I don't even really think that the technicals confirmed the short at any point in this stock as I look at this chart. Thank you for the question. I really appreciate it. And guys, these are great questions, and if I just gave Cameron a little bit of a hard time, whatever, he's going to be a better trader because of it. So don't be afraid to stick your neck out here in these afternoon meetings and talk about something that you did terribly and have us review it and let me beat you up a little bit, because it'll make you a better trader and it'll make everybody else a better trader also. So really appreciate the communication and the question there, Cameron. Scrolling through the VTF. I'm laughing at your comment there, Varun. From Jordan S. If stocks go past your level in the pre-market like an STG did at 410 and WI at 33.75, do you usually put a buy at that level in case it acts as support? I don't like that trade. I feel like you emailed me that once. So first of all, WY, I don't want this thing ever really getting to when I put that on my list Pre-market, it was above 34. I wanted this as a breakaway gap to buy it long off the open versus 33.75. But the market pulled back a little bit when pre-market, when we were doing the meeting, and so did this thing. So I ended up opening at that price. So this just became a breakout trade basically through 33.75 versus lows. That's one. Two, I don't like the retest trade anywhere near as much as I like the original trade. It doesn't mean that I never take it. It just means I don't do it very often. If I do it, I do it with much less risk. The best trades, from my experience, the absolute best trades in the market only give you one chance of getting stock. You either got that stock at that price, you got that stop at that breakout, or you didn't. And if you didn't, then you didn't, and you got to try to move on and find a different trade. So it is absolutely a tenet of trading that previous resistance becomes future support, and you can watch stocks there to buy stock back, especially. I love that as a trade, right? You had really good stock, thing works, you sell a bunch, it comes back or retests the level, you buy some back, right? Like what I always talk about with the sell high kind of buyback strategy for cash flow. You buy some stock back at the retest of that level. If the thing fails and you were trading it really greedy and you bought some stock back, you're break even on the trade. And if it works, then you make even more money. And if you're not as greedy and it fails, you even make money. I don't like the idea of a trade working in such a way where it should have been able to fully cover my risk. I missed it, and then I get involved and I take a loss. I think that's bad execution. So NSTG is a little bit tricky because I got partialed. So I left that bid out for a little while, seeing if I could get the stock to spread against me and still get filled. But once the ADMA on the 5-minute caught up to that low, so I probably left that bid out there for the first 10 minutes after the market opened, seeing if I can get the rest of the fill. The ADMA didn't catch up. I'm still willing to take that stock versus that $4 area. Once the ADMA caught up, I didn't want the stock anymore. I canceled it because now if it comes down and it fills me when it shouldn't be able to go down to that price anymore, it means something's wrong. And if anything, at a certain point, once we broke this high, I then put my stop in for all my stock here. So, I don't want to, like I said, I think I got filled like a third of the stock that I actually wanted at 410. I don't want to, and I was able to sell stock in this move. It went to 430, 441. I sold stock at in the mid-20s and the mid-30s. Yet, because I only got a third of my initial position, I had to try to make some game planning adjustments on the fly because I was game planning as if I was going to get my whole position. If I got filled, on the fourth bar of the day at 410 versus $4, and now had the full position and had only sold little bits there, I'd end up taking a loss on this trade that worked, this thing worked 3x my risk. And I'm going to end up taking a loss on the trade. I can't let that happen. So I really don't like the idea of putting yourself in a position to lose money in something where if you had just done a better job, you would make money in it no matter what. So at the same time, we do have to recognize what you're saying is absolutely valid. Previous resistance becomes future support. Previous support becomes future resistance. I prefer that for some sort of buyback strategy, though, than like a new purchase. Can we talk Oxy and Soxel from Varun? Can't talk Oxy without looking at XLE first. XLE had a good, healthy resistance day in front of 82. Oxy needs to get above 60. It needs to get above 60. It's just sloppy below it. I like it. A little disappointed about how XLE has underperformed OIH Friday through today. But I like it, but I need these charts to confirm. I need Oxy above 60. I need XLE above 82. I need Chevron above that 158 to 160 area. And you also want to ask about Soxel. Soxel is bullish, a little sloppy in here. It's at the midpoint of this bullish range, but still pretty bullish looking chart. Closed above Friday's high, so kind of started to break that wedge to the upside. Looks great. Yeah, Bill is also going to be away a good bit right now. We're real light-handed today. No Patrick, no Bill, no Josh. Yeah, there's some stuff going on with Starbucks and the union strike. I don't know how much that's actually affecting the company. I very rarely buy Starbucks, but I actually went to a Starbucks in Astor Place in Manhattan pretty recently, and they were protesting in front of it, and I walked in, there was still a line of people trying to buy their drink. Thanks, Varun. See ya. Thanks, Sharir. Scrolling through here, looking for anything that's directed towards me. I don't know when Pat's going to be back. He's dealing with a little personal situation that I don't want to talk his business, so I'll leave it to him if he wants to say anything about it. But we certainly hope he's back soon. I'm gonna assume he's not gonna be back tomorrow. There's a good chance he might not be back this week, but we'll see how it goes. I sure hope he's back soon, though. I tell you, it's tough. Okay, so that's everything on the VTF. Let me just pop over to the YouTube here and see if there's anything on the YouTube. If you're watching on YouTube, you know what to do. Give me that thumbs up sign. No comments in the YouTube. All right, so I'm gonna wrap it up. Good day today, gang. Have a wonderful night, and I will see you all tomorrow.